silver could end up being in three digits. It could end up being several times higher than people anticipate that it ever has been. And its relationship to gold could change in terms of the silver-gold ratio. Well, silver, if it stays within the ratio of 40 to 70, you could still have a very, very high silver price. And I did the math on it. I don't have it in front of me right now, but you could have silver at 250.
You recently wrote an article about how silver could you said that silver could do a palladium. Now, with palladium, we've seen an incredible rise in the last few years. So you actually think that silver could do a similar thing, and that if you look at the fundamentals, they're very similar to what we saw in palladium prior to that run up. So can you expand on that?
Yes, for several years, palladium was at a deficit before anything happened. And silver is in the same thing. It's entering into the fourth year of a deficit. Also, it went 3 times higher than anyone, including myself, could have imagined, because it had never gone above about $1,100 before. And it went to almost $3,000, and then it stayed there. It's still around $2,400, a couple of years after it went up. And so this really would be a surprise to just about everybody. I think the relationship to platinum to palladium changed fundamentally for several years, and it may be about to reassert itself as platinum starts its new bull run, but we don't know that yet. But I think that silver could end up being in 3 digits. It could end up being several times higher than people anticipate that it ever has been, and its relationship to gold could change in terms of the silver-gold ratio. So all of these things are in play to make it almost a mirror image from a concept standpoint of what palladium did in relationship to platinum and in relationship to market expectations.
And that was quite a big run up, and you say that silver could get to triple digits. One of the differences between palladium and silver is that palladium isn't a monetary metal. Silver is. And inflation expectations, right, and the value of the dollar can impact silver and more so probably gold, but it can impact silver as well. And silver and gold can be, because they are monetary metals, kind of a warning sign. If they're going up a lot, oh, maybe the economy is not doing well, maybe the dollar is not doing well. So if we see this huge giant move in silver, what does that signal for the dollar? Because with palladium it didn't really matter, right? No one really cared that palladium rose significantly, and it didn't really impact the value of the dollar. Those aren't really connected that much, but with silver and gold, they are. So what kind of a world would we be living in if silver overtakes $100, $200, $300? What kind of a dollar would we have?
Okay, let me go back because you've posed several questions in a package. Let's unpack it a little bit. First of all, silver, as you mentioned, is not considered. It's a Janus metal. It's considered monetary and industrial, but historically, most of the demand for silver has come from industry. And what has caused changes, large changes in silver over time, has been when investors take more of an interest in it than they did in the past, and they tend to have that change happening on the margins. As David Morgan always said, change happens on the margins. And so the margins where people buy more investment silver is what causes it to rise sharply. And that's what's happened, several times in the past, but it's still mostly an industrial metal. However, and I could be wrong on this, but I believe that last year, 50% of the silver that was purchased was for monetary reasons, in other words, investment reasons. So if that's the case, about half and half of the silver went to industrial versus investment. And investment is set to become an even larger percentage than it was last year, I believe, in that regard. And so now we're seeing it as a monetary metal. And the thing is, the industrial users are going to have to come in scrambling down the line if we end up with the type of deficit that I think we're looking at over the next 2 or 3 years. So let's move forward to what you mentioned about what would it be like, what would things be like if silver was $100? This wouldn't be something like people say, I wouldn't want to live in $5,000 gold because we'd have a societal collapse. I don't think that would be the case. You could have $10,000 or $15,000 gold and you wouldn't necessarily be having Mad Max. You would simply be having high inflation. You would have a very weak dollar, which leads to high inflation. and you would have more emphasis on the possibility of reinstating gold and perhaps silver as monetary metals, not necessarily in your pocket, but part of a group of metals that would be maybe supplant the dollar as a reserve currency, so to speak. So that we don't know what that world would look like, but I don't think it would necessarily be one that's hard to live in per se. But the problem is we have all sorts of political issues and divides, and we have economic deficits and things like this. So those things all influence the mix of which silver is a fish swimming in that sea. So to break out silver and say it's responsible for such and such, it's impossible to do, but it is a factor. And because people watch the price of silver like they do gold, not only you and I watch it, but the authorities do. And when they see it, quote, getting out of hand, they want to bring it back down so that people don't spend so much time looking at it and accumulating it. And all those things make for a very raucous environment. And how it plays out, we don't know, but it will be very volatile going forward for the next several years.
You mentioned how if we see silver explode and gold also, that might signal that, there's a lot of inflation, right? But that doesn't mean like we're in Mad Max, like you said. Where do you see the economy then at that point? Because some people predict that we're going to see high inflation, but then a weakened economy. So we're going to see stagflation, it's called, right? Do you see that happening, or do you see high inflation and a strong economy?
I see stagflation being the predominant theme. I remember the 70s when it was going on, and you had elements of the economy that were strong and elements that were weak. Systemically, the economy was kind of limping along in spite of some of the good stories, right? And also the inflation started picking up because of monetary policies and because of supply-demand issues, and all those into the mix created a situation where you could find any narrative you wanted, but the primary narrative was an economy that was not as robust as it should be, and monetary policy that was misguided, and investor interest that was taking place on an advancing basis because of these elements and because of the supply issues that arose around silver at that time. And they're arising now for different reasons, but I think they're going to be much, much more profound because of the new use cases that we have for silver with electric vehicles, EVs, solar energy, all this kind of thing, all the new uses of silver, and the fact that most of it each year is not able to be reclaimed. So you don't have a huge buildup of recycled silver like you do gold, which for the most part is still mostly around all that we've ever dug up.
Now, in your article, you also mentioned the gold-silver ratio and how really the ratio wouldn't have to fall that far to get new highs, new nominal highs for silver. Can you expand on that?
I wouldn't have believed fully the thesis that I developed even a few months ago, but as I thought about the palladium-platinum experience, and I thought about the silver-gold ratio, I started to see that the picture for silver could be bigger in terms of a price rise, at least a spike, and then a higher normal level price than most of us have really thought possible. Not just $100 silver, but multiples above that, at least for a period of time. And if you look at the silver-gold ratio, it's tended to, for many years, it's tended to be essentially between 40 and 70. I know it goes up to 75 or 80, and it goes down to 30 or 20 or 15 like it did for one day in 1980. But the general rule, the broad consensus, it's almost like the Bollinger Bands. They show two standard deviations above or below an oscillating point, right? Well, this, if you could think of 40 to 70 or 75 gold-silver ratio to be like those Bollinger Bands. Most of the time, it's contained within that. So we could have a situation where silver goes up into 3 digits, and we believe the case for gold is still stronger, even if it's blunted a little bit by Bitcoin. And so instead of going to 15 or 20,000 gold, it might go to 10 or 12,000. But still, there's going to be a connection to silver within that ratio. And with silver moving on its own metrics, you could have a situation, which I proposed, where let's say gold is 10,000, which is not an unreasonable expectation over the next few years. And then what would that mean for silver? Well, silver, if it stays within the ratio of 40 to 70, you could still have a very, very high silver price. And I did the math on it. I don't have it in front of me right now, but you could have you could have silver at 250, and I believe it would still be within a 40 to 1 gold ratio, just as it's historically been.